There's been a lot of talk between Trump versus Jerome. He wants interest rates to be cut. This video might be long, but I want you guys to really understand this very clearly. And that is why small caps will have a huge run this year from rate cuts. Let's start with reduced borrowing expenses. Smaller companies typically depend on borrowing since they have less access to capital markets and smaller cash reserves compared to large companies like Tesla, Amazon, Apple. You get the point. When interest rates are lower, borrowing becomes cheaper, cutting down on costs and potentially increasing profitability. Next, you have to realize small caps are more often impacted by economic fluctuations. Lower interest rates can stimulate the economy by making loans more affordable, which in turn boosts consumer spending and business investment. As economic conditions improve, these smaller companies often experience faster growth than larger, more established firms. Once again, Tesla, Apple, Microsoft. Once again, you get the point. When rate cuts, return on fixed income investments like bonds decrease. This often pushes retail to look for higher returns in the stock market, increasing demand for small and mid-cap stocks, which are seen as riskier but offer greater growth potential. So for those who don't know, IWM is the ETF that tracks small caps, kind of like the heartbeat of that entire market. It's looking like we're gearing up for a full-on recovery, almost identical to that fire run we saw in late 2023. Now, you guys know I'm a swing trader at heart, but when penny stocks get hot, I always like to be there before the next run. Just like I did with FFIE, I called this out at 4 cents, and that thing exploded to 55 cents. That's 1,300% profit for those who's trying to do the math. Now I'm going to break down the past performances during rate cuts and each year and how it performed. So for an example, in 2008 financial crisis, following the Federal Reserve's drastic rate cut to near zero, small cap stocks rallied significantly in the years that followed. The Russell 2000 index, which tracks small cap stocks, saw a considerable gain, outpacing the S&P 500 as the economy began to recover. 2019 to 2020 rate reductions in response to economic slowdowns and trade uncertainties, the Federal Reserve cut rates 3 times in 2019. 3 times. Small cap stocks tracked by the Russell 2000 index outperformed large caps in late 2019. During the early 2020 rate cuts due to the COVID pandemic, as you guys know, small cap stocks initially lagged, but then made a strong recovery later in the year as the economy began to stabilize. So rather you're trading stocks, watching the economy, or just trying to figure out where's money flowing, the nearby rate cuts is a possibility. It's not about what the Fed say, it's about how the market reacts. We've seen how aggressive moves like this can spark reversals, breakouts, or even trap retail if you're not prepared. So stay focused and have your levels mapped out. I'm well prepared for the small cap rally. I hope you guys are. And in the Discord, we'll definitely be taking advantage of all of those plays. If this video helped you understand the setup or gave you something to think about, hit that like button, drop a comment with what your thoughts, and subscribe so you don't miss what's coming next.